Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss a Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
So welcome in, everybody. We did this space last week, and it was superb. We had a great panel, and we talked a little bit about market sentiment, and it was kind of nice to do it in an evening as well when we had some stuff factored in from the day. Now, I think some of the topics I'd love to touch on today are one, general feelings in this market now that we've had kind of a week or two to process some of the global calamities that are going on. We've seen the big spikes in commodities like gold and oil. We have also an understanding that CPI data is coming. We have potential rate hikes. All those things are things to go over. And then also, rather than just throwing out tickers like I usually do, I want to talk about more of the opportunities that the speakers see, uptrends, areas of the market to pounce upon and go after. So that's kind of the things that I want to look at. Evan, anything you want to add on to that before we get started?
No, dude, that's perfect. I'm super excited for it. Honestly, I know Joe, Jay, and Brian are good friends. So wherever their conversation takes us, I'm excited for it. So, whatever we got, I'm here for.
Yeah. Certainly, if you guys want to riff at all in between each other or come in on each other, like that's totally fine with us because you all are good friends and we're excited to get this going. So, Jay, you want to kind of kick us off with your thoughts here, and then if the other guys want to bounce off of him or throw in any of their thoughts, we'll just keep it rolling.
Yeah, sounds good. It's great to have this forum, and I like the fact that you got people that know each other, and you're probably just going to be involved in a general conversation that we have amongst ourselves when it comes to things we're seeing. Brian and I, Joe too, but Brian and I do have the CMT designation. Joe, I don't know why you don't have that, but we study price patterns. We have very different styles. Just to give you a little introduction to how Brian and I met, it was through the CMT Association, and I was on a panel discussion, and someone asked me one of the biggest changes I've been seeing in the markets, and I don't know how long ago this was, Brian, 2013. I don't even know. But I said it's people trade volume weighted average price. Years ago, people would come into a crowd, you make them a bid or an offer, and okay, you can buy it at a quarter, or you could sell it at 20 cents, and it was strict bid and offer, and they pay a quarter. Well, now no one wants to make a decision; they just want to go with the volume weighted average price. And I saw this guy in the crowd, and his eyes lit up, and then next thing we know, we're having conversations. I bring him down to the floor to give him a live demonstration of how brokers are coming in and bombarding me with questions on an opening, and they're not worried about the price of a stock opening. They're worried about the volume in the stock. And so, we clicked then and there, and I've been following his stuff, and it continues to evolve, and it continues to amaze me. Obviously everything's relevant to time frame, and I think that's something the three of us are going to talk about a lot when we look at things. Is question number one: what is your time frame on this? If you're a day trader, swing trader, or in my old case, a market maker, 5 minutes would be a long time period. So we always try to preface, how we talk about the markets, but this is an interesting time. Joe just wrote a great piece, and I think we may have lost Joe.
Yeah, I shot him a DM, see what's happening.
Okay, cool. Oh, so let's talk bad about him while he's not here now. But Joe just wrote a nice piece, what to look for in a bottom, and I think that's something that we want to kind of discuss, because everyone's trying to pick the bottom, and it's probably the hardest thing to do. Picking tops, picking bottoms, that's not why we trade. We trade, and we follow trends, and we look, for patterns where trends may be changing, prices of interest, as Brian likes to say, and where the risk reward is in our favor. And I think that's always the most important thing. We do talk a little bit on, some programs here and there, and they always try to pinpoint you. Well, was that the bottom? Is this the top? And these are things I never feel comfortable saying. It can only make you look foolish, but we look for signs of tops and signs of bottoms. And I think, I look forward to having a discussion with these guys. So let me throw it over to Mr. Shannon and just see what some of his thoughts are before we do a deeper dive.
Yeah, sure. I mean, that was 3 years ago, Jay, and you were on that panel. I'd sent in a little text message. They were trying to be all fancy with their taking questions, and I sent a question saying, "How important is VWAP?" And yeah, we hit it off from there. But I had retweeted Joe's article today as well, and I have it pulled up here because I think he did a really good job. I had just put something on Twitter maybe an hour or so ago, just to kind of tell people again that I wasn't looking for the top, and it didn't hurt me one bit not to look for the top, and I'm not looking for the bottom right now. I'm just looking for opportunities in individual stocks. If I catch the low, it's by accident, 100%. I'm never thinking, hey, I'm buying the low, I'm going to buy and hold. It's up to the market to tell me how long I can hold by raising my stops up and on my time frame. And as soon as that definition of trend on my time frame changes, then I've got to get out. I've got to take my profits, and to me, you get a much, much better feel for the market by taking a bottoms up approach and letting the market kind of be aware of the market and what's going on. But, the way that I transitioned from bullish to bearish wasn't all at once. I didn't say, hey, that's the top. Instead, what I noticed was I was starting to get stopped out of longs more often, and I was having a hard time finding, swing trade long opportunities. And then I would find, a couple of short ideas, and the short ideas would work. And I'd be finding, 4 or 5 good looking short ideas a day, and maybe one mediocre long. So it was the market telling me, well before or after it topped. I don't even remember because it's not important. It's about making money, not about beating your chest and saying I'm the guy who called the top or the bottom. That's Elaine Garzarelli still. People still talk about her calling the top in 1987. Who gives a shit, right? We're here to make money. And the way to go broke is to try to pick the bottoms. And for the last 150 points, God knows this. I've been talking about the poster child, and it's continues to go lower, is PayPal. Everyone says it's a great company, and every time I tweet something negative, whether it's at $260 a share or at $96 a share, people jump on me on Twitter and tell me I'm a fool and it's a great company. And I say, well, it's a terrible stock. The stock is garbage. It's below the VWAP from the IPO in 2015. The average participant in the entirety of its lifetime is down 15%. It's crazy how loyal people stay to these brand names for what? They just keep losing money in them. It doesn't make any sense.
Yeah, great points all around. Joe, you back with us?
Yeah, sorry, I lost my connection, but hopefully, can you hear me okay?
Yeah, definitely. So Jay talked a little bit about the difficulty of finding the bottom there. Brian hit on a couple of other points as well as not buying into downtrends. Do you want to kind of bounce off of them and come in with your, initial analysis on the market here and we go from there?
Yeah, no, I missed the first couple minutes. Did we bottom yet? I don't know. Have we bottomed yet? How about now?
We actually officially hit the bottom.
I heard parts of what Brian said, and I agree. I think, and I've said this several times, I think we live in an incredibly impatient world, and people are really, I can almost feel like people are dying for a bottom. They're kind of like just been spoiled since the pandemic lows. And I get it. It's especially for newer traders, you're used to a new high every, few weeks, or at least, you don't go more than a couple months, especially in 2021 was a strong year. But when you study history and look back at some of the prior corrections, downtrends, bear markets, whatever you want to call them, they just take time. And the word acceptance comes to mind, that you just have to accept this is part of the markets and we're correcting. So I do see a lot of people getting very frustrated, getting very impatient on any little uptick. Is this the bottom? Is this the bottom? Can we jump in? And I just can't repeat enough. You need to stay patient. You need to stay patient. And I heard a little bit of what Brian said. And sorry, I'd lost my connection earlier, but this isn't about getting the dead low or the dead high. This is about getting, the bulk or the meat of a trend. And who cares if you missed the low and the high? Because I agree, it's total luck. And I think between Brian and Jay and I, we might have 100 years combined experience. But my point is, like, I never claim to get the lows, nor do I care. I just want to get the wind at my back, and it just requires a lot of patience. I wrote an article about 5 things. We talked about maybe discussing this if you guys want to, maybe go over a couple of the topics, but 5 things we need to see before we get that sustained uptrend. I'm happy to go into
Joe,
that.
Jay and I both agree, and we both, mentioned that. Yeah, that's a great place to start because you did an excellent job there.
No, thank you, and I appreciate it. I mean, I'll just go over really quick what my feelings are, and I'd love Jay and Brian to pop in. Like, I just want to see stocks set up. I like to shut out the noise. If growth stocks are looking good by setting up, meaning building bases and looking good and breaking out on good volume, that just shows a risk appetite, and I'm not really seeing that outside of commodity energy related. I'm a big fan. I don't want to get too big into the macro of don't fight the Fed. So right now, the Fed was very accommodative since the pandemic lows, and then they changed their tune in December of 2021. So right now, you just don't want to fight the Fed. The rest of the article is institutional buying. Big institutions control the markets. We need them to come in. Sentiment is getting bearish, but it's not at extremes. And then obviously geopolitical, some sort of resolution or tensions to calm down with Russia and Ukraine. So that was the outline of some things we would like to see before I feel comfortable in a sustained uptrend, not just these short covering snapback, type of classic short covering rallies we see in bear market corrections.
Appreciate that, Jay. Brian, want to bounce off that?
Oh, I was just going to point out, I mean, we've had 3 really good rallies this year. We rallied from a low of 420 up to 458 in a period of about 8 days, but then we gave it all back and made new lows. And then we had a rally off of 410 up to 440. I mean, these are 8 to 10% moves in the course of just a couple days. And there's nothing wrong with, trading those if that's your time frame, but be suspicious. Like this rally right now, we're up against a bunch of important levels that have the potential to become resistance. There's no sign of that quite yet, but take them for what they are and understand that you've got to keep your time frame shorter in this environment. If you can keep raising your stop, let's say you bought some this morning and you can keep raising your stop and you don't get stopped out during the day, well, then, maybe you sell a little bit just because of the overnight risk with a war going on and, raise your stop on the balance. And in the morning, if it continues to behave well, keep raising that stop up under the successive higher lows on the shorter term timeframes. And you'll be stopped out, not at the top, but near the next turning point in case we get another flush lower. Otherwise, who knows? Maybe you caught the bottom and, it's luck. It shouldn't be that you're trying to find the bottom. It's coincidental.
Brian, I know. Well, Jay, did you have anything you want to say on that?
No, I think these guys hit on a few things, but just from the minute by minute basis, Russia-Ukraine resolution, I don't know what kind of this is not my area of expertise, although I was a political science major, so it is, the headlines are making us just watch this market like a tennis match. Okay, the bombarding continues. They hit a hospital, we sell off. Oh my God, no! There's going to be peace talks. We rally, and the moves are fierce and they're fast, and the speed of this market is ridiculous. So, like Brian said, if you catch the bottom, congrats. There's all luck there. What we're looking for is a sustainable setup, and we've had. I'm looking at the S&P 500 chart right now. The January 24th low, the February 24th low. We've had big rallies off of those lows. So if you were able to buy that day, you did all right if you held for a few days going forward. And we just had another one today. In fact, if I recall, Monday was like the worst day since October 2020. Today was the best day since May 2020, and then yesterday we had 8 moves of 1% intraday, or 1% or more in the S&P 500. It was the most volatile day we've ever had in the market for up and down swings of a percentage point, and we saw more moves of 1% or more yesterday than we did in all of 2017. So this is, we're living through history, and you want to try to find a comparison to it. We we look at price, we see downtrend, we see bear market rallies. There's still a lot of things we want to see, and that's why what Joe wrote was great, because yes, we want to see a resolution in Russia, Ukraine, but there is a lot of things that have to shake out. We haven't gotten that extreme bearishness. It feels like we have. It felt that way Sunday night, but the Sunday night futures don't always dictate how Monday's going to go. And, it wasn't as bad as we thought it would be. So there's a lot to go on. And then, the Fed is next week. It's not the rate decision that people are going to be worried about. Jerome Powell has always telegraphed these decisions. We're going to raise a quarter of a point. Okay. What happens at 2:30 with the press conference? How does he handle it? What is the tone? How hawkish is he? Has something changed with, say, the data tomorrow, or with the Russia-Ukraine situation, with gas prices, that changes that tone? So there are a lot of X factors, but right now, the trend is still down, and I don't see it changing dramatically, with the exception of a halt in the war. And then you're going to get a rip your face off rally. We'll see how long it lasts. If it gets us above the 200-day moving average, that's good progress. But right now, it's hard to be excited.
Jay, quick question. What's the feeling on the floor of the exchange when you're talking to other traders or specialists and so forth? What are they saying?
Yeah, it's definitely a bearish tone to it. I mean, we're all professional oil traders now. That's that's what we're following. And by the way, crude, I tweeted this out earlier. Crude is lower today than it was on Friday's close, but I'm paying 60 cents more a gallon since
Oh, I saw that.
Friday
That's
at the
hilarious. Yeah.
tank. Come on.
Oil goes up $20 and gas goes up $2, and then it drops $20 and gas drops 2 cents. That's hilarious.
Yeah, but no, the mood is just like this. Where all of a sudden we're moving 100 Dow points, and people are like, "What was the headline? What was the rumor?" And these rumors circulate fast, and everyone's looking for an edge and to break a story first and to get into a trade first, saying, "All right, this is the news that ends it all," or "This is the news that, oh my God, Bill Ackman predicting World War III." And by the way, Ramp and Bill Ackman are now ratioing each other in a thread. I highly recommend somebody go and look at that.
I missed that. I got
It
the
happened
thought of
like
it. The thought of it's making me laugh.
it is, and Ramp is ratioing him, and it's fantastic because Bill Ackman is someone, and I'll never forget it because I was on the floor yelling at the TV. It was lunchtime. It was during the judges' show.
Yeah.
Halftime report, and Hell is Coming, and it had felt like we had just bottomed on March 18th, and then he comes out with Hell is Coming. We didn't bottom till March 23rd. And speaking of bottoms, it is funny that we're having this conversation on the 13th year anniversary of the, all capitals in quotes, the low from March 9th, the Haynes bottom for CNBC watchers. I'll never forget that. That was just capitulation at its finest. Hopefully we don't live through anything like that. That was a different time and different situations. This is also a different situation, but the field, just to get back to your original question, there's no panic on the floor. There's frustration. Big picture, S&P is down 12%. Granted, it's in such a short period of time, but we just lived through COVID in March to April of 2020, so 30% in that time. So this is a pain, but if you want to put it in perspective, it's a normal correction. You just have crazy headlines that are dictating what's going on.
It's pretty wild that's going on there. So I kind of want to get into a little bit, unless you guys have a topic you want to talk about. I'd love to talk about some opportunities. And somebody just texted me, is the 100 emoji gone? Yeah, it is. It was a great emoji. I know, Joey. I know. It's been a while since you've been on a space. Yeah, they took that away from us. Okay, so we've talked about kind of finding the bottom, timing the bottom, but like in reality, we want to do the opposite, right? We want to find the ones that are climbing. So we just talked about oil and some others. So let's talk about where the opportunities are in this market and what you all have been trading and where maybe retail should be gravitating towards. Brian, you want to go first?
Sure. I've, like I said, I never find the bottom on purpose. But what tends to happen, yesterday I got stopped out of some shorts, some really beautiful ones. One was GXO. I wrote that down from 77, what was from 78.80 and covered as low as whatever it was. Anyways, $13, $14. But right now we're kind of in this phase where we had this big rally today. 90% of it was, well, not 90%, 50% of it was a gap. You had to buy it when it was actually at its absolute worst looking, as it fell right into the close yesterday. So there wasn't really a lot of long opportunity unless you were taking much bigger risks than you should have had taken yesterday. I did manage to get into URA, which is, and I usually don't trade. This is kind of interesting. I usually don't trade the ETF. I usually go for a individual stock. But yesterday I posted some of the uranium plays, and I got involved in URA today. I just wasn't interested in the individual stock risk. So I bought that at 25.02. I've taken 1/3 off today at 25.94 simply to reduce my risk, and I've raised my stop. That is right now my only long. I have a very small short in ATC. And that one, it looks like it's ready to fall off a cliff. It's just hanging on the volume weighted average price from the IPO. And I'm looking at, I put this one on Twitter yesterday, I believe, TENB. It's a cybersecurity play. I haven't purchased it yet. It's still just kind of consolidating in a tight range here, but it looks ready to break out. So I've got a real close eye on that one. iRobot looks vulnerable, IRBT. Oil States, OIS. You look at the weekly chart there, that's got a lot of room. It just broke from 5 to 7.5. So I think it needs a couple more days to digest it and let this oil market cool off a little bit. But really, they're looking through my long list of stocks like I do each day. On most days, I'll have 10 to 15 names that I would consider for the next day. And today that's, only about 5 or 6. So, we're in a tough spot. And I think as I like to say is, I have to listen to the message of the market. The message of the market yesterday was cover these shorts. And today the message is go slow, which means things aren't real clear here. So smaller share size, smaller risk units, and be patient.
Awesome.
And that's been the message for the last several months, actually, too. I haven't really been taking large positions. It's more of a, in a bearish environment, to me, it's more grinded out because those overnight gaps can just annihilate you. So I'm not interested in taking large positions.
What do you make of the disparity between the indices to, majority of the growth stock names, where really the indices haven't, fallen that far? I mean, QQQ is still trading at where it was, June-ish, maybe, like early June, is kind of where it is now, versus a lot of these, look at like a Shopify, a Square, a name like those, where there's just this massive drop off. Is there anything that you see or kind of take away from that?
Yeah, that people are too focused on the overall market, and they should manage each stock based on its own merits. That when your stock starts breaking down, don't continue to hold it because the market hasn't dropped off. It's a market of stocks. And my feeling is that if you follow the individual stocks carefully, they're going to give you clues about what the market is going to do well before the market does it. You'll again see that growth stocks got stopped. Most people who have stops in a sense of, basic sense of risk management were getting stopped out of their growth stocks. October and November of last year, they were rolling over well before the market peaked. And, people would be saying, the market's being masked by the FANG stocks, and that the FANG stocks are so heavily, such a heavy, components in the sectors that those are the last ones for the institutions to sell. So they hold those ones up and kind of hide out in them because they know there's massive liquidity and they know other people are holding out in them. But meanwhile, they're selling the more speculative stuff like Square, like PayPal, like Roku, and, hundreds of others that have just been decimated. So each stock on its own merits first, and then be aware of the market and what it's doing. But, to me, it's about trading, and trading. I'm not going to trade, gold and the dollar have been rallying. That's not supposed to happen. So which one's wrong? The person who's betting that they should be moving in opposite is wrong. The market's not wrong. We can have things rally when they're not supposed to, and we can have things decline when they're not supposed to. And you can argue it till you're blue in the face that it doesn't make sense, but only price pays.
Only price pays. Facts.
I had to sneak that in.
Yeah, I saw that one.
Always has to sneak that one in. It's unbelievable.
Love it. Jay, you want to bounce off that next with opportunities?
Yeah, that's not a problem. I don't trade as aggressively as I once did in my new role. I talk more macro, and I do miss trading. In fact, quick story: when I was between my latest jobs, taking a little break, I just happened to catch the meme trade, and I was, texting regularly with these two about all the different opportunities we saw and all the setups and how it was almost too easy from a price point of view because you had all these long-term bases that we were breaking out of. Now, the memes was a whole nother level. That was just crazy. And, those didn't last too long, but there were some great setups, and that's what we look at now. And I don't see so many great setups. A great follow on Twitter, a friend of ours, Ian McMillan, at the Chart Life, I believe is his handle. He's really good at putting up setups, and he had a great one the other day, FLR Floor Corp, which is an industrial. And those are the kind of charts that I'm looking for, where there's a strong base, it's tested support a few times, and then it finally resistance a few times, and then broke above it. But the transports are very interesting. We're seeing a little disparity amongst the group themselves. Like FedEx looks like death, but from a short-term trading point of view, those last 3 days look phenomenal. So the long-term trader in me says you're probably going to get a bear market rally, but that could be, it's at 217 just under right now. It could rally 20 points if it gets above this 224 level and still be in a ridiculous downtrend. But this thing is not what I'm talking about when I talk about the transports. I'm talking about the shippers. Matson, MATX, trading at all-time highs, looks strong. Kirby, KEX, another shipper where, it's starting to pick up steam. The rails, they're not all the same, but Union Pacific has been acting great and is breaking out. And JB Hunt on the trucking side, JBHT, I think it caught a Goldman upgrade the other day. I'm pretty sure it was Goldman that upgraded it yesterday. But another chart that looks good to me. And then you break down, well, why are these stocks acting well? And, we have all this stuff to ship, and now things are finally starting to turn, and this logjam is ending, and these are going to be the movers. So I like that. And then there are a few developing nations that have been strong this year that continue to act well, and they're mostly in South America. Brazil, Peru, Colombia. If you're looking for tickers, it'd be EWZ for Brazil, EPU for Peru, and GXG is a way to trade Colombia, COLO, not the university. And South America is another interesting one. If you were to look at EZA and break down that index, for the top 10 holders are, gold or I think platinum related. They're all metals and mining stocks that really dominate the landscape over in South Africa. And it's been acting well. It hasn't really broken out just yet. But if you're to go back a few years, this thing has potential to continue on its winning ways if it can break out of this current level. So, there are a few emerging markets, transports right now, and then the hotels. I've been high on them for a while. I still think they're okay. They just suffered some damage, but they held up relatively well. So on the hotel side, I don't have an ETF that I really like that's specific to hotels. A lot of them throw in cruise liners and jets, and the cruisers may do better than the jets right now because of the price of crude. But the hotels, they've been acting well relative. So Marriott, MAR, Hyatt, and Hilton, H and HLT are in a group that I think from a risk reward where they're set up now, given the recent drop, could be a good play.
Perfect. Appreciate you outlining those. Joe, you want to throw some opportunities you're looking at?
Yeah, sure. I do like that Union Pacific chart, by the way, that Jay mentioned, UNP. There was also, I follow unusual option activity, and last week there was like a lot of August 265 calls, as well as some put writing in April 235 puts as well. So that's a bullish sign usually, and it makes sense if oil and energy prices are going higher that they're going to need to ship stuff by rail. But I really wanted to touch really quick on the question you asked about how the indexes are not down as much, but some of the Shopify's and some of these other stocks are down 50 to 80%. And one thing I've learned from doing this for a while is just when you think something can't go any higher, it usually does, and just when you think it can't go lower, it usually does. And you have to keep in mind, like Shopify, I remember posting that chart on an IPO base at $30, like not too long ago. And I wish I held it, of course, because I wouldn't be on the space. I'd be on an island somewhere. But the point is, like, the stock went from 30 to 1,500. And a lot of those, Kathy Wood names in 2020, they went up 3, 4, 500%. So my point is, just when you think they couldn't go higher, those stocks had tremendous moves, but they really overshot to the upside. So that's where you have to remember the 80-50 rule, which is that 80% of big winners give back 50% of their gains, and 50% of big winners give back 80% of their gains. So the drops we've seen in the Pelotons and the Shopifys and some of these names and Teladoc and all that stuff, it's actually not that abnormal when you go back and study history. Even Microsoft, Intel, Dell, Cisco, when they had their monster moves in the 90s, when we had that 36-month bear market from March of 2000 to March of 2003, those stocks really did the exact same thing, and they corrected 50 to 80% when you go back and look at their charts. So I just wanted to point that out, that some of these stocks giving back their gains is not that abnormal when you look at a weekly chart and look at the overall move that they've had. As far as stocks, the only thing really working, I've been keeping things light. Like Brian said, I'm the same. I'm not being really aggressive in this market. Energy is the only thing. Energy, some fertilizer names, some rails, stuff like that are the only things really working. I'm not bottom fishing tech because I'm just not interested in buying stocks in a downtrend. And, energy, made a nice move and now it's pulling back a little bit. But that's the only thing that's really, a couple of the names I've traded, HP and Apache, APA, and Devon Energy's held its 21-day DVNs very well. The Mosaic, CF, and some of those fertilizer names. But other than that, they're not really recommendations. I'm just keeping things light. I just think this is a short covering rally, and we still have a lot to get through. So I'm just keeping things light. So a lot of times when people ask me for ideas, I say, well, I'll have some when things turn around, but there's nothing wrong with sitting out or keeping things light, or you don't have to trade if the wind's not at your back, depending on your time frame.
Well put. Well put. Okay, I have a couple other topics that I want to delve into real quick. Before I do that, we have a great crowd here tonight. If anybody hasn't had the pleasure of checking out our speakers, Brian, Joe, and Jay are a fantastic trio that we're super lucky to get on Spaces. They obviously all have previous history. I think Joe might have mentioned it, about 100 years of analysis between the three of them, and trading in the market that's going on. So you're clearly looking at a wealth of knowledge, and great follows to click in and check out. They come on a ton of Spaces. They give analysis. Jay, looks like you have something to say.
No, you just left out great hair. I just thought that was important. You mentioned that.
Yes.
And it might be like 75 years. I don't want to make Jay out to be that old. So
can we get Doug Boneparth in here for juxtaposition? I think
It's so funny. Doug does so many spaces, and I don't think I've been on one with him. Yet we had each other so very often. So
yeah,
yeah.
I did one with him this morning, of course. And so, yeah, I'll just put out there to anybody that hasn't already checked them out, please do. And then again, if you haven't checked out the Bullish Rippers account, my name is Gav Blacksburg. My personal account is up here. I also run the Wolf account, which you see up here. And then Stock Market News and I have teamed up on this Bullish Rippers account. So I do 2 spaces a week from here. I do a market power hour every Monday, and then we do like a rotating space. Now we're doing market analysis. We might do some industry deep dives. And then Evan hosts long-term investing spaces on Thursday. So that'll be tomorrow at noon. And then in addition to that, Evan does a bunch of the tweets that you're seeing on this page. So really good tweets. It's insights, revenue, earnings, things like that. So a great page to come in. And we almost have this at 20K, and we're going to do a big giveaway at 20K. So if anybody hasn't already checked this out, we could get to 19K tonight on the Bullish Rippers account. And then we're going to do a nice giveaway at 20K, and we'll keep on trying to bring on incredible speakers like this. So if you like spaces, be sure to check out the co-hosts and the hosts up here. And if you love market analysis and learning how to understand and approach treacherous markets and, being able to actually be profitable in times where things are just going to hell, these are the right people to be checking out. All right. I have a couple topics I want to hit on, but Evan, Stock Market News, are you able to talk now?
Yes, sir. I am back.
Okay. Any topics or questions you wanted to throw out? And I can tell you what mine is if you want to bounce off it.
Let's hear yours. Yeah.
Okay. Mine was, what is going on with earnings season? Feels like 2 earnings seasons ago, everything was like, okay, does it go up? Does it go down? Based on how good the earnings were. Then last earnings season, it was everything goes down, right? No matter what's happening. And then this one, again, it's like, okay, some stuff like Crowd, great, we're having good. Disney, great, we're up. And then others just completely drop off. So it's kind of like, where are we with that factoring into this market as we kind of draw to the end of that? So that's just something I wanted to throw out.
I'll go first on this one if you guys don't mind. Yeah, I mean, it's kind of really defines the markets that we're in, very bullish versus very bearish, a little overly speculative and, greedy, if you will. But I think the one earnings report that kind of gave me that pause, like, all right, this isn't good. Something's changed with Google. If you guys recall, Google, I think they announced a 20-for-1 stock split when they had their earnings as well, but it was a blowout quarter on the fundamental side, and I know Brian doesn't care about the fundamental side, but it was a blowout quarter. It gapped, it went to new highs, and it faded the rest of the day, the rest of the week. It continues to fade. And the theme of this past quarter, which, now with Bumble out, I think we're done. That's a joke. We have FedEx coming up next week, but I think 98% of the stocks in the S&P 500 reported for the quarter. Stocks that didn't go down were kind of winners. It was very weird, the sympathy in the groups when Facebook, now Meta, reported, and that got taken behind the woodshed. Remember what Snapchat did? It was down well over 20% that day, if not 30, 40% all-time lows. And that Facebook reported the day before Snap, and then Snap's earnings were great. So then you had the recovery of the loss that they shouldn't have had because they went down in unison with Facebook because they're both metaverse stocks, and then it reacted to its earnings on top of it. So the earnings season was really interesting. It was more a game of survivor. You didn't see many stocks breaking out to new highs and continuing it. Apple, another example. Apple, long term, the trend is still up. It's getting a little choppy up here. We're forming a nice little triangle, but it's still in an uptrend. Things are looking okay, but there are signs of weakness. But their earnings were strong. So what happened? It didn't go down, and that, to me, is a quality of the bearish market that we're in. That the winners didn't really run. They just hung on, and the losers got punished, and they got punished hard. And we can rattle off a bunch of Kathy Wood names that got destroyed. Snowflake being the recent example. Affirm, another example of stocks that didn't meet expectations, that were already down. And guess what? It didn't matter. You're going lower. So it was an interesting earnings season. Now we focus Russia, Ukraine, and the Fed, and we see what next quarter brings us.
Thanks, Jay. Joe, you want to go next?
As far as earnings season, I don't know, my initial reaction is it's a correction. It's shit's all over the place. I mean, yeah, some names that are really beaten down. Any ounce of decent news is going to be a big short covering. They're going to have exaggerated moves, like we saw with Snap and, 20, 30, 40, 50% on some of these. And then some of the ones that are beaten down, if any bad news comes out, some of these names are still overvalued. So, then they'll still take a hit if they're trading at a high PE. Because I've always said PE doesn't matter except in a correction. When we get into when we're in a good strong uptrend, it doesn't matter. Price to earnings is the most useless and overrated tool used, I believe, in analyzing a stock. But it actually does matter in a correction when things tighten up and when people get more defensive. So I think the real earnings season, though, my feeling is the real earnings season's, April into mid-May, where you get the bulk of, a lot of the big names reporting. Right now, it's no man's land, as I call it, because most of the earnings are in the first month or two of the quarter. And then the third month of the quarter, March, June, September, is just garbage of not much earnings, not much fundamental news driving the markets, a lot of headline-driven stuff. Even in good markets, I've noticed that there's usually tough, higher volatility and tough times in the second half of March and June and September. So we just have to get through this, and I think the real earnings season will kick off, first, second week of April. And maybe if we get a little clarity from the Fed, or at least if they raise a quarter and say something like, okay, we're going to be patient given the situation globally, or we're going to be careful, and the market says, okay, now we don't have to worry about that for another 6 weeks and we can focus on earnings. So we'll just have to wait and see.
Sounds good. Brian, you want to weigh in on that, or any other thoughts?
Well, I think that earnings can be a great catalyst for movement. I'm not really particularly concerned about, what the numbers are and researching them and that. I figure that's the job of the market to collectively do. So if a stock gaps up and it holds on to its earnings and holds the VWAP from the earnings, then it becomes a trade candidate for me. If it starts to fade, then, like Joe said, some of the beaten down ones might get a quick short squeeze rally like the one we saw today, Bumble. I don't know what their earnings were. Don't really care either. But, to go from 16 to 24, I highly doubt that this gain will hold here. It's huge volume, but you're right up against the 20-day moving average, the year-to-date volume-weighted average price, the 50-day moving average is declining. You give this thing 3 or 4 days, I think it'll probably start to roll back over and, punish the people who are overly optimistic and chasing. What more can you expect from a stock, up 50% on one quarter's earnings when it's in a primary downtrend? This is, I think any institution is going to view this as a gift to sell the remaining shares that they're stuck with, that they weren't quick enough to get out of previously.
Yeah, that definitely makes sense to me. Okay, there's a couple ways that we can draw this. I definitely, if there's any specific topics you guys want to touch on, I'm happy to keep feeding. One of the ones that I kind of want to feed into here, and maybe Brian, you want to go first on this, because I know that you're invested in some of them, is the movement in the cryptocurrency markets, and how, for a long time it was said, the safe haven asset, right? Kind of, but really just a lot of risk. And as people we've now seen flock to gold and oil and other areas, we really haven't seen that same flocking to cryptocurrency. But we have seen, some hold up and some movement. So just wanted to get any insight you have in that area, since I do know that you trade a couple.
Yeah, I mean, Bitcoin has been volatile. It's just kind of in a range of 36 to 44, really. And, at that 44 level, we've got some important volume-weighted average price levels from the high that it made, the all-time high, as well as the high in, the summer of 21 and the low of 2021. Those three volume-weighted average price levels all come together at 44,000. And, this is the third trip in the last, this year that if it makes it up to 44, this will be the third trip up to this area. And, it's just this big range of 36 to 45. If you want to trade in between those ranges, that's one thing. But it's possibly entering an accumulation stage that could be ready for the next markup stage, but you won't really have confirmation of that until it can get above and hold above 45,000 in Bitcoin is the way I'm looking at it. Everything else is just kind of noise in here as it figures out how it wants to absorb this international crisis. And that's something that I had brought up, and I said, here's a serious question for you hodlers. What isn't this what Bitcoin is designed for? This is what the so-called utility was. Everyone, no one's really described to my satisfaction what the utility of Bitcoin is. It's a great gambling product. Everyone talks about the blockchain and it's going to do this and do that. But what's the real use of Bitcoin itself? There's really, again, I haven't heard the convincing argument of what it is. I'm open-minded to hearing it. I'm not a hater, but
Store of value.
Store of value, right? But it's not storing that value that I can see. It should be, ramping higher on this type of stuff. People should be flocking in as global currencies, get smashed.
But it's the lesser of two evils. If you're in a third world country and they're going to devalue your currency, it's a lesser of two evils to take a shot at storing it in Bitcoin than, you have $100,000 equivalent in a Venezuelan or Egyptian bank. You wake up the next day because they devalued the currency and it's at 50,000. You'd rather store that 100K in Bitcoin and take the lesser of two evils. I'm not arguing the point. I'm just bringing up a potential reason.
Joe. I mean,
potential reason.
That's the same story here all the time, but it's, it didn't help people. Or did the Russians move their money into crypto prior and now they're selling it for dollars or converting it to gold? As they say, in a correction, the correlations go to 1, that nothing is a safe haven.
True. In correction, everything goes down. Absolutely.
Yeah. So, what is do you want to bet on something that, and people say, well, you're just, to me that, well, you're just focused on the dollar. Of course I'm focused on the dollar. That's what I do every day. I buy and sell stocks, versus the US dollar. I go to the store and I spend US dollars. I buy a house with US dollars. I buy cars with US dollars. I plan, trade, do vacations with US dollars. Of course, that's, what I'm interested in. And if I see that, if I think that inflation is a problem, well, then I can short stocks. I'm not going to hold stock. The argument is, well, hold stocks as a hedge against inflation. But if inflation goes up and stocks go down, you're going to lose, instead of losing 7.5%, you're going to lose 40% in these growth names that aren't growing. So it all comes down, as always, to risk management. And if you're comfortable with Bitcoin and holding on to it forever, then that's what you should do. But it's not going to be something that, I have money, I trade with it, but it's, if it all went to zero, it would suck, but it wouldn't impact my life.
Yeah. And one other point that Mike Novogratz made, who's a genius and knows way more about this stuff than I do, but he made a great point that Bitcoin was a play on the Fed easy money policy, so that when they started to tighten up, he actually said it would make sense for Bitcoin to come down as an opposite play for that.
That does make sense. Yeah.
So Jason came up. He was in the crowd, and you shot over a couple topics you want to see if we had touched on. We have touched on them lightly, but really haven't dug into them. Jason, do you want to kind of throw out those as any thoughts you have / any questions, and then the panel can discuss?
Yeah. What's up, everybody? How's everybody doing? Happy QE ends day. So yeah, I mean, look, QE's ending. We've got a hike coming, CPI data tomorrow, energy going nuts, pulling back a little, it needs to cool off. And, more importantly, we've got a market of literally millions and millions of new people who have never, who entered the market during COVID, who have never known anything but QE. So I was just interested to hear your guys' take on it. You know, my take is, obviously, I think that like energy being where it was, never mind what's going on with Ukraine and Russia, was just going to force Powell's hand as far as hikes, and now I'm just I'm curious to see the reaction by all of these people that have never been in a market that's just been so juiced up by the Fed. That's it.
I'm happy to respond if no one else wants to. It's a great question you ask, and I'll just kind of tell a quick story of when I started trading around 95 into 2000, which was one of the greatest periods ever. I'll be honest, like if people can learn, new traders can learn from my experience. I honestly thought stocks only went up. Sound familiar? And I just thought all they did was go up. And we did have corrections in 97. There was that Asian contagion correction, whatever it was, with Japanese, and then 98 long-term capital, Russian debt crisis. But I felt like they just happened so quickly and came right back that I remember I held eBay that went from 50 to 200 and then back down to 50. And my friend's like, you held that all the way back down to 50? And then a few months later, it was at 300. I was like, yeah, but it's at 300. Like, who cares? And I just assumed everything went up and up forever until I finally realized when a couple of my friends who were mentors at the time told me, you got to look at older charts and study history, that this is a very, very strong period. And that's when it hit me, when I started to see the damage that can be done during these corrections, to kind of smarten up. So if I could pass on any sort of lesson, is that if you study history, especially the newer traders, you're absolutely right, Jason, that this was a very insanely liquidity driven rally that we've seen since the pandemic lows. The Fed threw more money at the markets than they had. I even wrote about this in the 6 weeks following the pandemic. They bought more treasuries they did in 6 weeks than they did in 9 years combined from 2009 to 18. Kept interest rates at zero, all the bond buying. It was liquidity and stimulus on steroids. Never mind what the government stimulus did as well. A similar analogy would be in 99, it just wasn't as strong of stimulus, was the Fed was actually worried about Y2K. They thought at December 31st, 99, every computer was going to blow up. So they kept interest rates stable and doubled the money supply and added tons of liquidity to kind of fuel that dot-com boom. And the lesson learned is, I hate to say this, you just have to learn the hard way. You have to study history and learn that there is periods when the Fed is going to provide stimulus in various different manners. That's why Marty Zweig said, don't fight the Fed. And when they pull that liquidity out, you don't want to fight the Fed on the way down. And I hate to say this, but I learned this the hard way too, is newer traders are going to have to learn that stocks do go down, the market does correct, and it's going to take time to get through this correction.
Yeah, because I was looking back at the last time, they announced the taper, and it was like December 2014, and it lasted till like just about 2016. The S&P 500 did like 12% in a year. Could you imagine? Like, people freaking out. Like, wait, it's only going, and it just bounced around. So yeah, I think with like my take, is pretty simple. Like, we're gonna have to go into a recession to get this under control. And to your point about all the bond buying, I mean, 2.3 trillion of junk bonds. That was it. That was like the biggest mulligan I've ever seen in the market. Maybe since 2008. So yeah, I just think consumer discretionary things like that are going to get hit. So
yeah, no, I agree, and they already have. I don't think we have to have a recession. We just have to unwind what's going on and just be patient through, it's an unwinding of liquidity and a raising of rates. And that takes liquidity out of the system, and it makes, credit spreads, borrowing becomes tougher. Everything becomes, mortgage rates, everything becomes just more difficult. And it just something that a lot of newer traders aren't used to, being patient, because I want new highs every day. Well, we want a lot of things, but that's not how the market works.
Real quick, I want to continue this conversation for sure, but Brian, I know that you do have to hop off. If any of our other speakers have time limits, feel free to just send me a DM on the Wolf account, and I'll be sure to accommodate that. But Brian, wanted to give you just a chance to weigh in on the QE otherwise discussion and any other closing comments you wanted to give as well.
I mean, yeah, we all learn the same way. And for me, it was always, I learned from my mistakes, and the market gives you plenty of opportunities to make those mistakes. The question is, are you learning from them? Because that's what it takes to, progress to the next level. Anyone can make money, and we saw that, in a bull market. With the most ridiculous things that, seasoned people looked at and said, "I'm not going anywhere near that. Good luck for these people who are, buying these things." But we've seen this movie before, and it creates great opportunities. This is a perfect environment to learn in. I think Joe just kind of touched on that. I wasn't paying 100% attention. I'm marking up a chart of Bitcoin here.
A lot of people don't pay attention to me. It's okay.
No, it's just my ADD, Joe, and I'm looking at Bitcoin falling in here and marking up a chart. Anyways, it's an opportunity to learn, and the market will humble everyone at some point. I look at these people. I just posted something about, catching a low, and that's not my goal. And someone responded and said, the market will go higher. It will do this week. And I just blocked the guy, because he's obviously an amateur that is noise to anyone. And nobody knows what's going to happen. And the loudmouths are usually the ones that get the attention, but, pay attention to price, not what these people, with the loudest voice have to say. Price will silence the loudest voice there is out there.
Love it. Really good. Brian, any other comments from yourself?
No, I just posted a chart of Bitcoin. If anyone wants to look at that, key level coming up, possibly at 40K. That's the VWAP from the low just the other day. And again,
I just pinned it.
Oh, and that's kind of where we saw, you can see that 45 level where those VWAPs come together. It was also prior support, which is offering resistance. So, we're just kind of stuck doing nothing with some exciting little blips. That's all I see there.
Love it. Brian, also want to congratulate you on 200,000 followers. You're doing a ton for this community, and it's a real pleasure having you on multiple spaces a week.
Yeah, thanks, Gov. It's an honor to have that many people, and it's something I take seriously, which is why I get so adamant about not buying stocks in downtrends, because I see so many other people telling other people to do just the opposite. And I see people saying my time horizon is 3 to 5 years, and then they say they bought something, then they sell it 3 days later, and you just stay honest to the process. Stay true to price action. That's all that matters. So I'll talk to you tomorrow, Gov. Hey, Jay and Joe, great talking with you guys, and we got to do it again sometime. I'm sure Gov can facilitate.
Hey, I'll catch up soon, bro.
I'm happy to keep putting these together. No problem at all.
Thanks, Brian.
All right. Take care, guys.
Take care, Brian. Okay, so we may touch on just like one or two more topics. We've gone through, for anyone that's more recently joined, we just discussed some CPI and QE information. We also went over tickers and areas that we were eyeing for opportunities for the week ahead, things to stay away from, trends, earnings season, and a bunch more stock market news. I know we chatted a little bit in the DMs, Evan, but any topics you want to put out here? I know we've run a little bit over an hour.
Yeah, I'm always down to respect people's time, so however much they got. But for me, Apple is my largest holding. We had a Apple event recently, although it wasn't one of the biggest ones, but I always find how Apple reacts around events to be very fascinating. So I think that's a topic in and of itself. Also, I'm not sure if we talked about the cybersecurity space. The NVIDIA getting hacked and being held ransom was something that I didn't actually see too much of until someone told me about it this morning. So I'm surprised not that many people are talking about that, but maybe another topic if anyone cares about it. But overall, Gav, this was a fantastic space. You're fantastic at this. So whatever direction you want to put us in, I'm always down for it.
Yeah, I like those a lot. I also think that there's the Amazon split. Actually, can we do like 2 minutes on why a company splitting nowadays makes it go up 6%, which in the case of, Amazon was like, what, billions of dollars? Jay, any thoughts here?
Yeah, I mean, it's dumb logic. Unfortunately, people think, "Oh, I'm going to get X amount more shares," and I'll be honest, like if I had 100 shares of Amazon and now I could have 2,000, you pump your chest out. It sounds great, but the bottom line is, it hasn't changed anything. But in the case of Amazon and Google and Nvidia before that, I find it extremely interesting because to me, when companies like this do this out of nowhere, just like Apple did 7 years ago, I believe it was. To me, it screams that they want to be included into the Dow. That really is what it comes down to. The Dow hasn't changed up in about 18 months or so, I believe. Amgen and God, what else? Salesforce, and there was a third
Salesforce.
that went in. I could see an IBM being booted. I could see a Cisco being booted. And Amgen, I don't even know why it was put in there, but yeah, to me, the companies, they have an intent to get more investors to invest in them. Well, yes, the retail investor can buy more, but with fractional trading, it really doesn't matter anymore. You can buy $100 worth of Amazon instead of owning a share. You have a fraction, and now those fractional shares could equal a share, but it's more of a status thing. Why do they react like that? I wrote a blog post. I think EXPI was the stock. This goes back, a year ago. Ramp and I were actually in this stock at the same time. And we were DMing each other because it announced a stock split. We got out up 20 points. It went from like 78 to 98. We thought we were heroes. It went to, I believe, 150. No other news other than the stock split. So there is no rationale behind it. Google faded after its split announced. The split hasn't come in. You may see a little run up as it hits. But to me, it's about indexing. These companies, they love the high value, but for a Dow stock, which is a price weighted index for those that don't understand, meaning if you have a certain price, like Coca-Cola's in the Dow, it's $60, but so is United Healthcare, which is $400, or it was the last time I looked. It'll be $350 for all I know. They are one of 30 stocks, but if Coke goes up 10%, that's $6. That's not going to affect the Dow as much as a 10% move in United Healthcare, which could be $40. So they try to split these stocks so they're in that $150 to $200 range, which is about, I think it's like $155, $160, the average price of a Dow stock, and that makes them more accessible to that index, gives them new investors in the stock, and it gives the retail investor a better price point to enter.
Perfect. Joe, any thoughts?
On which topic? Sorry.
So that was on stock splits and like why they're causing this.
Oh, yeah. Sorry. I agree it doesn't mean too much, but in the past, for sure, I agree with Jay's point about wanting to be included in the Dow because of certain criteria. But in the past, it was usually an indication of like good prospects for the company. Because if the stock was at, like, Cisco split almost every year in the 90s, and Dell and all these stocks, and I think the stock would go from like 100 to 200, then they'd split it. And then they didn't want it to get cut in half again. And then the stocks would just run back up again. So their reasoning, my feeling was that it was their way of telling investors that, that business is good. And it was an indication of business being good. But now you don't see stock splits as much as you used to. So I don't know if there's any other motives, but that was just my 2 cents from the past from what I remembered. But it also could be just pressure from shareholders that want stocks cheaper, but nothing really profound to say there.
Okay, one other topic. Oh, Evan?
Yeah, quickly, just wanted to add two things. One, I completely agree with Jay
that this is them wanting to be included in the DAO. He explained it, everything there. Second point, I really wish Twitter Spaces let me actually, use the emotes to express my feelings. So I'd use the clapping hands to agree within there. I wish I had the 100 still. But so just Twitter Spaces, please bring back those old emotes, and I'll let us keep moving
You're
on from
speaking
there.
Joey's language.
Yeah, how can I not have 100 to agree? But besides the point, let us keep moving.
We're going to touch on, I'll throw this to you first, Joe, cybersecurity. We saw Crowd. It had, it's one of the few that are profitable, went ahead and threw up good earnings. And we saw what happened, right? After an 8% day, went up another 13.5% after hours for a 23% day pretty much. Obviously it's best day in a long time here. And the problem is, I wouldn't be surprised if it gave most of it up tomorrow. In this type of market environment, it's very tough to understand why where there should be great demand for something like this. And they added Net now as a client after being a partner for a while and more. It's just a confusing industry. Do you have any thoughts on it?
Yeah, no, I love the space, and within software, it did very, very well, obviously, over the last couple of years. The problem is, like I said, I hate PE. I don't think it matters except in a correction. Like, to use an extreme example, in 08, 09, when we had the financial crisis, Walmart and McDonald's held up pretty well when everything else got smoked because they were sort of value staple type of stocks. When we go through corrections, PEs matter. And CrowdStrike growing their earnings, I'm looking at it 63, 70%, going from doing 100 million a quarter to their last quarter reported over 430 million in revenues, which is an amazing growth story. The problem is the PE is 227, and I never care about PE except in corrections. So a great growth story. I'm sure it'll be fine longer term. The problem is that when we go through corrections and the Fed is raising rates, they start to hit some of the higher valuation names. So that's the only reason I can think it's struggling at this time.
Totally makes sense. Jay?
Yeah, so I got sidetracked for you March Madness fans. Iona falls in the first round to Ryder, a 13 and 18 team, and is out of the MAC championships in the first round. That as a Fordham alum, that makes me smile. So I apologize for that. But getting back to cybersecurity, the sector was so strong last year. It broke at the end of the year, and now it's there aren't many real winners in this space, and we had hit on this. It's going to be interesting to watch CrowdStrike tomorrow because how it reacted after hours. I don't know how high it got. What was it, 180 right to the 50-day? So this, if the positive earnings trend continues in a bearish condition, it's probably a fade after the opening, after those first 30 minutes. But I'm looking at the CrowdStrike chart now. The RSI is trending higher. That's a positive. It's made higher lows the last two times down. If it can get above the 50-day at 180, 180.87 to be exact, and hold, then maybe we can take another 25 points higher. But the sector has just been beaten down, even given all the positive news and the need for this space. The technicals are telling me there's a lot more work to be done.
Okay, sounds good. All right, we're at 9:13. The last topic that I would go over, Evan, do we want to touch on Apple briefly? Stock market news.
Yeah, my bad, dude. Honestly, 9:15. I think we may be good to go into wrap ups, depending on them. I'm always down to talk Apple, my largest holding, but maybe we save it for the next one.
Sounds good. Okay, then let's go into some closing comments. So in closing comments, any other thoughts, opportunities for retail? If you want to leave them with any specific tickers for tomorrow, that would be great as well. Whatever you would like to say. Jay, you want to go first?
Yeah, I didn't get to respond to Jason's question, and it was a great question because one of the things that I do focus a lot on are the retail investors and the newest investors to the market. The people that follow me on Twitter know I talk about my kids investing, that whole learn by doing. We did bring a lot of new people to the market, some for the right reasons, some for the wrong reasons. The AMC apes that are buying because it's a cause and hold on and still fight that fight. I can't even, go there. It's not why I invest in stocks. We talked about trends and momentum. I don't buy stocks because of causes that really don't exist. But the important thing with these new investors that are going through this tough market, this is not an easy market, is to teach them to diversify, to take an L. The best trades I've made were taking small losses and moving into something else or going to the sidelines. Yes, I still have core holdings. Yes, I'll hold Apple like Evan will till the end of time. But even though it's coming to a critical juncture, I've had Google, I've had Coca-Cola, which is boring as hell, but I've had it for a long time because that is the tranche that I have for my long-term holdings. And it's very important, as people that have been in this industry, to, talk to these people, have these conversations. What you guys are doing here, I don't know who's listening into this, but if there are people that are just new to the market or experiencing this for the first time, they're hearing from people that have lived through it. And the headlines may be different. The pandemic, I joke about this all the time, but when that hit, what did we have to go base it on? We had to go back to 1919 to look for a headline that was even remotely similar. And, you're going on price charts and you're going on what happened and how long it lasted. And the markets were totally different. The speed is insane now. The way news travels is in your fingertip. So people that are investing, that are going through the tough times, they have to ask themselves, what was my goal? What was my time horizon? And if they're long-term investors, I think this is a great opportunity. My son, who put his, first investment away into a retirement account. That's how old I am. I have a son that has a retirement account now. He went a little aggressive, like I said he should, and then he goes, but I have to own a little Tesla like my little brother does. And I'm like, oh, do you really have to? And now he looks at it, and like, he put, literally, it was $1,000 in, and now it's worth like $760, and he's frustrated. But I told him this is okay. When I invested in 92 to 94 and I started, it took a little time, but as you continue to invest, you continue to put away, you cost average, you look at the bigger picture over time, stocks tend to win out. And yes, what the Fed is doing is scary. The headlines are even scarier. But if it is World War III, it's a nuclear war, you can't bring your money with you anyway. So, I like to invest over time on the long time horizon, short term horizon. I follow the momentums, I follow the trades. I know my risk reward when I get into a trade. Doesn't mean I always listen. I will try to catch a falling knife every once in a while. Joe, I apologize. You think something's oversold and you get in. But if you try to buy that Affirm at 90, yeah, this is a true story. I bought Affirm at 90. You have to have a stop because it was just at 140 a few weeks ago. I'll get 10 quick points out of this. It'll be easy. Well, it wasn't. And I ended up losing 6 points on it when I was trying to go for 10. It wasn't even a good setup. But you do get emotionally involved, and that's the hardest part. And the newest investors, they need people to talk to say, yeah, this sucks, and or you messed up. You didn't have a plan, or this is good. You're going to cost average, and if your initial thesis is something you strongly believe in now, fundamentally, technically, then you stay with it and you continue. So those are my 2 cents, and I didn't get to talk to Jason, so I apologize on that. Joe, guys, it was great. I do have to run. Joe, we'll catch up soon. And we got to go to a concert. You still owe me one. And
I do. And you never have to apologize for. Really quick, your point about buying a firm. I'm not against if you want to buy anything in a downtrend. What you do smart about it is manage risk. So you took a stop. So even if you took a shot and lost a few points, you didn't write it down to 30 something where it is now. So managing risk is smart, and it's a good thing you did that to avoid bigger losses.
And I mentioned I was just looking, some transports, looking at FedEx. Short term, there's a play there from a risk reward point of view. But fundamentally, I know earnings are out next week, so you want to be a little careful there. I never traded for earnings ever. In fact, as a market maker, when I knew I had earnings in one of my stocks, I came in flat every time. It was just a flat out gamble, if you were riding an earnings report. So, earnings I try to avoid, but when you have a long-term holding like an Apple or a Google, you don't worry about that because fundamentally you believe they'll be okay over time. And now if something drastically changes and my mind changes, PayPal is an example of that. I've been out of my core holding in that for a while, and I had the stock for 5 years. And it pays me. I still have an odd lot. I can't give it all up because I'm emotionally attached because I bought it, the day Icon told them to spin out the eBay or vice versa. I forget what it was at this point. And technically it broke above 38 and it was a huge base. And I held on to it and I sold a little on the way up. But, there's some reason I can't sell that stock. And I look at a chart it right now and I have no idea why I'm wasting money in the stock. So, you never learn. You do get emotionally attached to these things.
Love it, Jay. Great having you on here. I feel like we kind of have to make something regular with you guys because this was awesome. Something.
All right, we'll figure something out. Well, guys,
no committing.
I'm gonna get
something.
Yeah, we'll get Jay's agent involved if we can get a Nike contract out of this. We'll do it all, no problem.
All right, yeah. Talk to my people. My people would be my DMs, and like tomorrow, Sixers Nets. I can't be disturbed. I'll be booing Ben Simmons through my TV as any true Philadelphia fan would. But for this, you guys, you do a great thing, and I can't wait to talk to you guys soon. So have a good one.
Thanks, Jay. Is it bad that the only jersey I own is a Philadelphia Ben Simmons jersey?
Well, it makes a good doormat or wash rag now. So it's funny you mention that because my daughter, who goes to school where Gav went, she her only jersey going to Philly was a Ben Simmons, and she wore it once, and people were like, "Do you know what is going on with this guy?" And now she has an Embiid jersey, so she's fine. But
here's the worst part. The worst part is I ordered an Embiid jersey. And then later that day, I was like, I really like the number 21 better. And so I went and I canceled the Embiid jersey and I ordered a Simmons one.
Oh my God! Yeah, get the Harden. That's what everyone wants now.
I will never ever rep a James Harden anything. I don't like quitting. I don't like quitting on people.
No, number 0, Tyrone Maxey. That's the way to go. So that kid's energy and the smile he brings. I've never seen anything like it. He's just so happy all the time. It's hard not to like him, regardless. Although he did go to Kentucky, so maybe that could be why I don't like him. But that's the hot jersey, the Maxey and the Harden, the 1 and the 0. But all right, guys, I really have to run. Joe,
all right, take care, Jeff.
Pleasure. All right.
Yeah.
See you, Jay.
Just give me a Shaq Orlando jersey, and I'll wear that anywhere. All right, Joe. Any closing thoughts?
Nothing really besides, I've been kind of just been given the same message to just, be patient. It's a good time to study history, especially for the newer traders. Go back and look at past corrections. And, if you're struggling, don't beat yourself up. There'll be better times ahead. We all make mistakes, and I've been doing this 25 years. I make mistakes all the time. I just try to, number one, minimize them. And number 2 is learn from them. So, it just involves putting in a little bit of effort and being honest with yourself and just understanding. Like, it took me a while to really, comprehend a lot of things. And, now I just know, okay, we're broken down through certain moving averages. The Fed is against us and I get more defensive. I raise cash and I just keep things light until, stay on top of things every day until things turn around and signs of health start to show up. And those signs that I'm looking for anyone who's interested, I did tweet out my article that was featured on Yahoo Finance today of 5 things to look for, for some sort of a market bottom or sustainable trend. If anyone's interested, I'm going to be on tomorrow right around 4:00 Eastern on Yahoo Finance talking about it as well. And again, it just involves a lot of patience and stay mentally tough through this and learn from your mistakes. And there'll be better times ahead. It's just going to take a little bit of time before we see healthier conditions.
Absolutely. Pleasure having you on here, Joe. Been seeing you on a lot of spaces lately. If anybody's not already following, he's, just a fantastic follow for content on spaces, on the timeline. I believe you write a good amount of articles as well, right?
Yeah, I do. I write and a lot of bad jokes. So thanks for putting up with those. And but I appreciate the kind words. I'll repeat what Jay said. You guys are doing a great thing. Always happy to help out and contribute in any way I can. So thank you again for putting this together.
Our pleasure. Okay, that is going to pretty much do it for tonight. One more time, if you haven't already, myself, I am Gav Blacksburg. I run the Wolf account, which is up here. You could see Evan on the Stock Market News account. We kind of been running this account together, although he's doing like 90% of the work. I'm hosting 2 spaces a week. If you enjoy spaces, we are doing like 40 hours of spaces a week total between really these 3 accounts. These are the accounts to be following if you like financial spaces. We try to bring on a really diverse crew onto our spaces. We cover everything from stocks and crypto to NFTs, ETFs, live option trading, technical and fundamental analysis, short-term and long-term holding, and more. We see some of our favorite friends in the crowd as well, TSDR, Wolfie, of course, the Bullish Studios account, and many more. Thank you for joining us tonight. You are awesome. That's pretty much everything I have to say. Evan, anything else you want to add in for final comments?
Yeah, no, just big shout out to all the speakers for coming on here, Joe, Jay, and Brian. This was a fantastic space. Probably one of the best ones we've had on the Bullish Rippers page, so I'm super hyped about that. Make sure you're following all of them. Joe's the easiest one up here. He's literally in the spaces. Click into his page, check him out, hit that follow button. Brian Shannon, Alpha Trends, and then Jay Woods. I believe it's just Jay Woods, and I want to say 8 is there. But that was a I have no idea. We'll see. But big shout out to them. Make sure you check them out. Give them a follow. I also want to give a huge shout out to Wolf Financial. He is speaking from the Bullish Rippers account right now. This guy is going nonstop on spaces all the time. So if you enjoy content, if you enjoy this type of thing, make sure you are following that Wolf account up here. It's one of the best follows. You will be getting nonstop content, more or less. Honestly, I feel like this guy is going towards the direction of having that account live 24/7. I'm not saying Gav live 24/7, but feels like that's the direction we're going. I know nothing, but hey, I'm excited for it. So I think that Wolf account is a must follow. Check it out, and just big shout out to Gav for putting this together. So yeah, one last shout out to all the listeners for coming in and having, being receptive to this and allowing us to have a platform to give this and give information. We're gonna keep doing this stuff. We love doing it, and yeah, now I'm actually done, Gav.
Okay, appreciate the kind words. Thank you to everybody that is joining up. Yeah, it's only Wednesday, right? And we've actually already done 25 hours of spaces this week, just for perspective on where we're at right now on spaces. So with that being said, thank you to everyone that tuned in. Our next space is a Bullish Ripper space. It is at 12 p.m. EST tomorrow. Typically, I do live option trading Thursday mornings, but we're taking a break this week, and instead we are going to do the long-term investing. We are actually teaming up with Benzinga for this one too. So come check them out on that 12 p.m. EST space. And then if you liked Brian Shannon tonight, you can join us at 3 p.m. EST tomorrow for Power Hour live technical analysis with Brian Shannon and Richard Moglin. We do that every single week, Thursdays at 3. And then I have a bunch of NFT spaces in the evening that you can catch as well, and a real estate space that's going to be at 5:30 p.m. EST tomorrow. Thursdays are one of our most full days. We'll probably have about 8 to 10 hours of content. Enjoy. Thanks, everyone, for tuning in. Take care. Have a great rest of your evenings. We appreciate you all.